All right, so let me say hello and welcome to another weekly edition of Stock Market Mutterings. Doug here with the LincolnList.com. This is where I'll do my best to try to make some sense out of this very senseless market. Share with you some of my trade ideas and setups I have for the week, and hopefully that results in putting a little bit of money in your pocket. Now, this is for the week of the 30th of September, last day of the month, guys, and I do hope your September has gone well. Now, if you're struggling in this market, trust me, it's nothing to be ashamed of. I get it. This market has behavioral issues, and it will test your patience. And I'm sure that you're sitting there every day. If you're not a trader. You're sitting there pulling your hair out at this senseless BS trade war, impeachment, schizophrenic nutbag of a market that just moves on every headline. It's like these algos can read, and man, can they read fast. It's like before you even know what's going on, you're seeing 100-point drops, 100-point rips. It's just all over the place, and anything can change at any moment. So trust me, I've lived through this before. In fact, when I first started trading for the first 6 or 7 years, this is how it used to be all the time. So it's nothing new. If you just started trading over the last couple of years, that's why you hear a lot of the older traders saying it was abnormal, but that's a different topic. So I get it. I understand. If you're struggling with this, I'm going to post a couple of links up here on the screen. You can trade with us live in our live trade room. You can just watch us trade every day, learn from us in a real-time environment. For those that can't commit to a trade room or a live trade room type of environment, you can also join the live feed if you want to learn more about them. The links are up there on the screen. So let's kind of talk just a moment about this market and what it is that we're seeing here. I mean, don't get me wrong. It's freaking ridiculous. It's so damn annoying. And I can't wait until this trade war garbage is put to rest. It's got to be one of the longest overhanging clouds on the market I've ever been involved with. And I've been doing it for 21 years. I mean, it's insane. And now these algos are so fast. It's like they're just right on top of it and you're seeing these wild moves. But there is some predictability in it, because if you notice that every time the market starts working its way up to highs, gets around high a day, starts breaking out, some negative crap comes out. Now we've got sprinkled in a little pepper on top of impeachment proceedings. It's like, oh God, block out this freaking noise. You're going to drive me crazy. But every time it gets up towards high, what comes out? We don't need a trade deal with China. We don't care about China. You know, we're going to pose more tariffs. And then the market starts falling down, falling down, falling down. And then you notice when it starts selling down for about an hour, about mid-morning, if it doesn't bounce, it's almost like clockwork. Something comes out. We're closer than you think. China wants to make a deal, and it's like, oh God, here we go again. So it's like high a day, bad news. Low a day, good news. It's like they're literally watching the market, sending out these headlines. Like they get these tweets pre-programmed that, hey, when the market goes down 100 points, send this tweet out. I mean, it's bizarre. And like I said, it can drive you crazy. Now, this is why I want to talk about this, because you know, you're in an environment now where, well, not now, it's always been that way. You've been sold on stuff, and you've been sold that trading is easy. You hear it all the time. You see the infomercials. These 2 patterns make me rich. My strategy makes these students multi-millionaires. You know, I trade 1 or 2 stocks a day, and I'm done at 9 o'clock, and I'm out golfing or having a sandwich. You know, that's BS. And the reason I hate it so much is because I've been doing this for so long, and it's never ever been easy. Even though this is my income and I've made a very nice income and I'm very lucky to be doing what I'm doing, this is not freaking easy. This is irritating sometimes, you know, and I hate when people try to say it's easy. And when we come into this business, often we think there is a holy grail, that there's going to be something that a professional trader is going to show us that's going to make our lives easier. Like we're just going to sit around here and click the mouse a couple of times and it's all going to go like clockwork. Now you take a look at today, right here, and you see this big drop in the market off of a headline piece, okay? There's no amount of technical analysis in this world. None. MACD crossovers, Fibonacci, cycles, floor, pivots, Elliott wave. Nothing can help you with that. That doesn't matter. What matters is this, guys. I've talked about it before. Trading is a mental sport. It's all mental. Your mental state, the way you think about yourself, the way you feel about your process and your system and your confidence, that's what makes a difference, you know? Because if you're sitting there and you're somebody that can't take losses and you always have really big losses, not taking losses, not being able to accept taking losses means you're not confident in your process that you're ever going to have wins again. That's how this whole thing starts. You're not mentally convinced that you can make money here. You're not mentally convinced that you belong here. You're not convinced that your process is strong enough to handle the test of time. So you can believe whatever you want to believe. I'm going to shoot it straight from you here after 2 decades of doing this. It's all here. You can throw darts on a board and guess if you have the strong enough mentality to understand how the market internals work, how the function of the market works, how things can quickly change, and you're only as good as your last trade. You're going to do fine. You'll figure, yes, you'll have bad days, but overall, you're going to be fine. So remember that as we move forward. You're going to have to go through these types of markets if you want to do this for a living. We all have to deal with it. And like I said, this is how it used to be. But deal with it. Find a way to deal with it. Find a way to build that mental strength. Stop drawing lines on the chart all the time. Stop depending on technical analysis. Stop, everything's perfectly uniform and symmetrical and easy to read in hindsight. But trying to do this in a real-time environment, trying to deal with the mental fatigue, the stress, the exhaustion, the frustration, dealing with all of that, that's, man, guys, wow, that's what'll make or break you here, And like I said, I'm 2 decades in, and do I finish? Is every day a smooth sail? No, it's not. In fact, there might be 5 days out of the year. Every trade, you got to work every trade. I've clawed for every dollar I've ever made in the stock market. I just clawed for it. It's like under my fingernails right now, still. Scars. Ugh, I know what it's like. So anyway, take it for what it's worth. How about we talk about some stocks, huh? Let's talk about some stock. I kind of got off there a little bit. Whew. I still have hair. I was sort of pulling it out earlier, so I'm lucky there. So anyway, gonna just talk about the market here real quick. One of the interesting things, 50 moving average was tested 2 times this week. Both, I think this was on Tuesday and then on Friday. Didn't close below. Still, if you kind of block out the noise, you put away all the sketchy moves intraday, and you just look at longer time frame, chart still looks really constructive. Now, I'll be interested to see that Monday when we start going through if we lose that 50. If the market has trouble with that 50, then there is a possibility we start trading back down towards the mid-280s, which were those lows that we experienced through August. I mean, that remains to be seen. Still, though, if you can block out, one of the things that you want to look at, when I'm talking about blocking out the noise, is just look at the facts. Look at the facts. Look at what's in front of you. And one thing I'm looking at when I see a daily chart, it's still bullish. It's still holding the 50. Dips still get aggressively bought like you see here on Friday. And it's hard when you look back in this chart. We really haven't had 2 back-to-back big down days since this sell-off started, since that initial sell-off happened in August. So when you kind of block out that's to the positive side for the bulls. You haven't got that yet. Two really, hammer down days. You haven't got that in a while. Dips still get aggressively bought. Longer term moving averages are still on the bullish side, is still holding. Now, to the bearish case, every time that market gets up towards the top, it's like kryptonite. 3,000 is just like a rejection zone, and it's a solid rejection zone. So at some point, as always, one of those we'll let go, and we'll get a clearer picture. But right now, it's a day-by-day thing. Now, I do want to talk about some individual stocks. And I might grow a beard and turn completely gray as I patiently wait for the moment when ROKU may bounce. Now, I'm a little bit upset because if you go back a couple of weeks ago, I said this is my top short. In fact, I think I spent 10 minutes of the market mutterings talking about how I was going to smack this ROKU at 175. Well, I'm proud to tell you that I'm all the way down here at 99. I didn't short any of it. Sometimes that happens. That's pulling out the other part of my hair. But now I'm just kind of waiting for a bounce, and I'm still waiting, and I'm still waiting, and still waiting. I don't know if there's even going to be one. I mean, trust me, this thing was hella overbought. It's still up like 200%, but now it's back down into the earnings. I want to watch this one here because I've got 2 ideas now, and I've changed my stance a little bit. I've definitely been looking for it because I feel like, okay, sometime in the near future, Roku's going to have that plus 10, plus $11 day. I'm not so sure now. And I actually think if it starts to bounce and I see those bounces being sold off kind of like they were today, or weak or unable to build, I'd short those bounces right now until this thing can put together a couple of hours. I mean, right now, that's what you got to look for. A couple of hours of green, because it can't even do that right now. There's some range in this thing now. I'm leaning still to the short side, but I'm not naive enough to think at this point that this thing can't smack backwards whenever it wants to. Same could be said here with Netflix. This was a good stock, particularly this week for us, and it's not a lot to it. It's just pretty much looking for fatigue zones like we had early on last couple of days, some early wicks like you see here on Thursday, and some early wicks today. Just trying to see some fatigue around the 10-minute mark of the day, and they're putting in a short with a stop at high of day. So far, that plan has worked out really well because it has dumped. It only had one really solid day. Now, again, just like Roku, I'm not naive to think that this thing can't claw its way back up, that you won't see something like that. And that's another interesting point about this market as well, guys. I mean, when you're looking at the overall market itself, the SPY, the Dow, the Qs and stuff, they're still pumping those, hey, look, it's green. The market's still green. The market's doing good. But these individual names have gotten their ass kicked. We've talked about those TTD, WDay, PAYC, ROKU, Shop, Netflix. I mean, some of these past Momos, these big Momo players for this year have literally been taken to the woodshed and smoked. Now, the problem with this, just like Roku with the rest of them, Shop can be put in the same type of a category, is that they're down a lot, yes, and you feel, remember, it's a mental game. You feel that they're going to bounce. But even with this, like Shop's still up 100 and some percent for the year. It's like even with this correction, they're still up a lot. That shows you how damn overbought these things were in the first place. So I don't know if Momo's going to return to those names. I won't necessarily put Netflix in the category with the TTD, OKTA, PAYC, those kind of little thinner betas, but you kind of have the same formula going on. They're up a lot, but Netflix is down for different reasons. So going forward, I'll give you these: TTD, PAYC, PAYC. These are all shorts on failed bounces. I don't want to do any chasing on shorts, but I feel all of these are shorts on a bounce. And when I say that short on a bounce, if it's still up after an hour or two of the day, that's a different story. But if you start to see fatigue 10 minutes in, 15 minutes in, you start getting that rounding top pattern here, like you see where PAYC has a failed breakout early, you're probably going to see more pressure to the downside. And if you notice these things, when they do bounce, that's the other thing. Just like Roku, you see PAYC is a good example. They make these bounces, but these bounces, they're lame. They're not even able to last for longer than 35, 40 minutes. And then they make another low, and then another low, and then another low. Now, if the market ever decides to smoke out itself and correct under the 50 moving average, these are just going to get worse. They're going to go even lower. So, don't be the hero trying to fish out a bottom. But again, it's all scalping for me. At any moment, this can change. They can go super bullish. They can go super bearish. Again, it just depends on, open up Monday, let me take a look, and then I kind of go from there. But I think you're going to see that. Now, if you're sitting there going, man, I really want to long something because I'm a long kind of person, I'll give you that. RH. Look at this chart on RH. RH looks pretty good. You got a lot of consolidation here, but you're not getting continual up moves right now. I think you're going to need a break of 172. You're going to need a solid close above 172. So put that there. Apple's another one. They're fighting this one hard. I mean, it's fading a little bit, but it's strong. So maybe that's something to look at. And if some of you have a little bit bigger risk appetite, take a look at this Ulta. It's up a little bit too much right now on Friday. I'd like to see how it does Monday, but it's been, hunkered around the bottoms here, building a base all throughout the month after disappointing earnings. There's a void to fill up there of probably 15 to 20 bucks, but after having a positive day and breaking range and closing high and being up about $8 on Friday, I don't necessarily wouldn't make that my first move on a Monday, but keep that there. So let's talk about these Momos real quick as I wrap it up. PAYC, WDay, OKTA, TTD. We'll throw Netflix in there. Roku, Shop. If they can't stay up for an hour or so, they're probably shorts. But don't be naive enough to not think that at some point they're not going to have a small rally. But it might not be, because as of right now, none of them have found a bottom yet. They're still trying to figure it out. So it could get a lot worse. To the long side, Apple on dips looks good right now. They're still supporting that stock well. RH looks good if it can get up there a little bit. And Alta, see how Alta, it depends Alta on Monday. We'll see. So anyway, guys, again, if you need help with your trading, visit the lincolnlist.com. Thanks for listening to me rant. It's good. I got my blood pressure up. I'm feeling good, ready to start my weekend. As always, trade well. Talk to you next week.